Adam, just want to quickly start with you on Russia-Ukraine in relation to the euro. Where do you think the euro is going to trade in the months going forward? Is it actually going to be rattled, or is it going to just kind of wobble around where it is at the moment with Russia and Ukraine rumbling in the background?
Well, I think so long as the sanctions we're talking about are sort of micro and targeted in nature, then it rumbles along in the background, and that's what we've seen so far, and that's what we expect to be the case for several more months. There is clearly a risk that sanctions become more broadly based, and the more broadly based they become, the more of a risk to broader activity they become. That's not our central scenario, but if that were to be the case, then it clearly becomes a much more euro negative story.
Sure. And what are your forecasts for the euro dollar going forward?
Well, we think in the near term there is still a risk that euro dollar tests back up towards 140, and not necessarily through, but certainly towards 140 against the consensus view, which is still very, very outright negative. Longer term, we agree that the risk is that the dollar more broadly strengthens, and that's enough to push euro dollar lower, maybe down towards 130 in a 12-month view. But near term, I want to be a little bit non-consensus, and I think there are still some risks that the very bearish consensus is confounded in the near term.
Okay, dollar fell against the yen as well after Barack Obama talked about, geopolitical concerns surrounding Russia and Ukraine. What do you expect that cross to do in, let's say, Q2?
Again, we're still less convinced than the consensus that we're in the sort of rampant dollar bull market, which is broadly expected. I think for me the balance of risks is that again we test lower in dollar yen through 100 potentially to 97, 98, as some of the very long-standing and in my view still very large short yen positions get shaken out. Most likely catalyst for that would be a general risk-off move, something completely outside Japan, as the yen is now the only G10 currency that really trades as a safe haven. It would be the major beneficiary in my view if markets turned risk averse.